This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at key events for investors and traders. Stock picking could be making a comeback as volatility falls and attention shifts from interest rates to individual growth stories. The S&P 500 rose 1% between Friday, November 29th and Friday, December 6th. It was the third straight positive week, establishing a new record high near 6,100. While cyclicals like industrials and financials were strong after Donald Trump won re-election in November, growth stocks regained leadership last week. Some of the big gainers were mega caps like Tesla, Amazon.com, and Meta Platforms. However, smaller names like Palantir Technologies, DocuSign, and Marvell Technology also surged. That kind of price action seems to resemble trends in 2020 and 2021 before investors worried about inflation and interest rates. It could also remind some people of the environment in the late 1990s when the Federal Reserve hiked rates to slow inflation, made a few cuts, and then did little as a historic bull market took shape. Cleveland Fed President Beth Hammack said on Friday that the United States is at or near the point where it makes sense to slow the pace of rate reduction. She cited stronger than expected inflation, growth, and the labor market. Hammack also made comparisons to the 1990s, calling the Fed's limited rate cuts at the time a relatively successful precedent for helping to sustain a long expansion. Most of last week's economic data was uneventful. Non-farm payrolls and hourly wages rebounded more than expected, but initial jobless claims were higher than feared. The Institute for Supply Management's Manufacturing Index showed an uptick in new orders following months of weakness. Services, however, missed for the first time since July. Consumer discretionaries rose the most last week, powered by Tesla and Amazon. Technology and communications also outperformed the S&P 500. Those three sectors, by the way, were most associated with growth investing. That helped push the Nasdaq 100 to a new record closing high for only its second time since July. A key technology index also broke out, as we will discuss in a minute. Stocks associated with Cathie Wood of ARK Investment were especially strong. Her strategy focuses on long-term growth companies, mostly in industries like software, services, and e-commerce. Its main holdings include Tesla, Coinbase, and Roku. Speaking of Roku, the streaming video company had its biggest weekly gain in more than a year, after Needham said its growth potential was underappreciated. Coinbase also surged as Bitcoin crossed $100,000 for the first time. Cathie Wood stocks like Roblox, Palantir, and Robinhood Markets also hit new 52-week highs. In contrast, financials and industrials lagged. Small caps fell. Energy was the worst performing sector overall after OPEC Plus delayed increasing oil production. While that may sound positive on the surface, it highlighted weak demand and rising supply. Overall, the price action was consistent with a shift away from value stocks and cyclicals in favor of growth. Supermicro Computer jumped last week after announcing an internal review found no financial wrongdoing. The maker of AI servers also received a listing extension from the Nasdaq, helping calm fears of alleged accounting irregularities. It was the second time in the last 3 weeks that Supermicro had the biggest gain in the S&P 500 index. Lululemon Athletica had its best week in 8 years, after reporting better than expected earnings and revenue. Strength in overseas markets like China helped drive the beat. HP Enterprise shot to record territory as demand for servers and AI systems pushed quarterly results ahead of expectations. Tesla rose to its highest level in almost 3 years as analysts cheered CEO Elon Musk's tease with President-elect Trump. Attention is increasingly focused on the potential for robo-taxis starting next year. Amazon jumped to new record highs and had its biggest weekly gain in almost 2 years after releasing new AI tools at its annual AWS conference. The programs will help automate content generation. Speaking of AI, Salesforce jumped to new record highs after customers embraced Agentforce. The service, launched in September, lets companies build programs with advanced reasoning that can adjust to changing business data. Workday and Apollo Global Management also jumped on Friday afternoon, following news they will join the S&P 500 on December 23rd. And now let's chart the market. The S&P 500 has steadily advanced since mid-November, gaining in 12 of the last 14 sessions. Most indicators on the index appear bullish, with faster moving averages above the slower moving averages. Wilder's Relative Strength Index, or RSI, reached an overbought condition for the first time in 5 months. Moving Average Convergence Divergence, or MACD, is also rising. Those patterns are potentially consistent with positive momentum. CBO's Volatility Index, or VIX, ended last week at its lowest level since early July. The yield on the 10-year Treasury note also remained below its April peak. Those points could also support risk appetite. In addition, the S&P Technology Select Sector Index jumped to its highest level since July. That could be important because its holdings represent nearly 1/3 of the S&P 500. We now turn to the coming week. It has a few important economic numbers and earnings reports, with Wednesday's inflation reading potentially the most noteworthy. The main items today are quarterly results from Oracle, MongoDB, and C3.ai after the closing bell. Tomorrow features the Goldman Sachs Financial Services Conference, which could impact some companies in the sector. The Consumer Price Index for November is at 8:30 in the morning, Eastern Time, on Wednesday. Crude oil inventories are due later in the morning. Thursday brings the PPI inflation report, initial jobless claims, and a European Central Bank meeting. Broadcom and Costco report earnings after the close. Nothing important as on Friday. Thanks for watching. Please visit tradestation.com for more.